Joining us now, NBC News senior business correspondent Christine Romans, Jared Bernstein, former chairman of the Council of Economic Advisors under President Biden, and Sabrina Rodriguez, national political reporter at The Washington Post. So, Christine, take us to this jobs report. What are the things that stand out to you?
Look, I mean, the labor market is still resilient, and I think that's really important considering all of the questions about how the president's trade strategy is going to ripple through the economy overall. So you've got 177,000 jobs created. You've got healthcare jobs created. You've also got, you can see warehouse and transportation jobs in here. I think that's directly tied to his tariffs because you had a lot of front-loaded companies rushing in inventories, and so there were jobs probably surrounding that. But when you look in federal jobs, 9,000 lost, 26,000 federal jobs lost so far this year. You'll start to see that number grow. And here's why. There have been a lot of government layoffs. And anybody who took a buyout or is furloughed from the government and is still getting a paycheck, for example, if you had a buyout, you're not counted yet. So there could be a lag before those numbers really start to show up here. So this is the kind of a number that really shows the durability of the American job market with all of this uncertainty swirling around, Jose.
And Christine, so it's interesting because for so long, I would venture to guess probably years, if not decades, a lot of the economic growth in jobs was in the federal government part.
Yeah, I mean, yes, indeed. And that has been a part that has been a sturdy, some economists and labor economists would call it kind of like a shock absorber. This is a part of the labor market that's a shock absorber when times turn, because you have this steady, solid part of the economy, the labor force that is employed. And this is the president and his team. They don't want that anymore. So they've been aggressively firing American workers. So that number will begin to change, no question. And I will say, Jose, also overall, these numbers, these are not the gangbuster numbers of the past couple of years. These are, it's a steady cooling in a resilient labor market. This is exactly what the Fed wants to see.
And Jared, when you were in the Biden White House, you were always so kind to come and speak to us when these jobs reports came out. So today, outside of the White House, I ask you, give me your take on them.
This is a solid jobs report. It came in better than expected. The underlying pace of job growth is around 150,000 per month, as Christine correctly noted. That's not like the gangbuster numbers that we were posting when I was around, but that was in part just recovering back from, of course, the very deep pandemic-induced recession. So the key factor right here is that 150,000 jobs is enough to keep the unemployment rate pretty low. It's enough to provide opportunities for people looking for work, and we actually saw a nice tick up in people coming into the job market. So all told, this is a good job market. But I happen to have been listening to your show for a while now this morning, and I've heard just one negative anecdote after another from business people, and I happen to believe what they're saying. This trade war is hurting them. Now, they say in economics that the plural of anecdote is data. Well, not yet, not in the jobs numbers yet. We saw some of that in the GDP numbers. But if this trade war persists at this magnitude, it will impact the job market, but it hasn't yet.
And so, Jared, is there something to what, President Trump has been talking about, the reorganization of the world economic order, right? But is this jobs number also showing the reorientation of how jobs and where jobs are created? Because the fact is, as Christine was telling you, that when you have actual diminishing federal jobs, and you include that in the formula, and then you get these numbers, is that also part of a changing shift?
I wouldn't say so in the sense that, there's 2.5 million federal workers in a job market of 160 million people. Now, those layoffs that we're talking about are, I think, quite destructive and certainly very tough for the people who are facing them. But I would not call what President Trump is engaged in any sort of seriously global restructuring. This is him acting out of his just very deep antipathy towards imports, towards trade, towards our trading partners. It's far more chaos than any sort of organized plan. Look, this is kind of an Occam's razor moment. We have a strong job market that has been in place for many years, generating real wage gains to consumers in an economy that's 70% consumer spending. Consumer spending is holding up. The economy is holding up for now.
And Sabrina, so this week we saw the Ukrainian minerals deal. Beijing is now signaling it's open to trade talks. What that could look like, no one knows. This better than expected jobs report. How's the White House feeling in all of this?
The White House, we're seeing them definitely feel a little boosted by the jobs report today. We're seeing them feel some relief to see that, okay, maybe some contours of deals are coming together. But the reality is that we're a long ways away from these deals coming to fruition, particularly with China. And we see that, you know, we're a month after today, May 2nd, a month after Trump said that he, you know, was Liberation Day imposing all these tariffs. A few days later, announced that he was putting a pause on the majority of those tariffs. He said it was a pause for 90 days, and he's talking about making, you know, trade deals with all these countries that he paused those tariffs on. To do these deals in 90 days is incredibly difficult. I think for folks who I covered trade policy for years. So the idea that I spent a year covering just the negotiations between US, Canada, and Mexico, and we're going to do deals with, you know, dozens of countries in a matter of weeks, is very hard to envision. And the reality is, given that there's just so much uncertainty about the future of the tariffs and just how much that could really impact Americans if we're already feeling impacts with the limited ones that have gone into effect.
And Christine, let's talk about that, because this new tariff on auto parts set to take effect tomorrow. What kind of impact is that going to have?
Well, look, I mean, the North American auto industry is heavily reliant on goods and services from Canada and Mexico and everywhere around the world, right? So now the president has sort of stepped back, and instead of all of these tariffs stacking on top of each other, these auto tariffs, there'll be a way to have a rebate for what you're paying for the auto parts tariffs. It's a complicated, you know, I have to tell you, for an administration that has talked about cutting red tape and being more laissez-faire to business, there is so much red tape around these tariffs. It's a little bit counterintuitive, but it's a whole new structure here for them to figure out how to tax the parts of a car. And the economists that even after all of these, you know, changes from the White House are saying $2,000 to $12,000 extra for the price of a car, probably $300 extra, according to one estimate, for the insurance that you pay for your car because of higher prices. So tariffs eventually mean higher prices, and now it's just how much higher. That's what everyone's trying to figure out.
Yeah, and Jared, now we're being told Mark Carney, the new prime minister of Canada, is just announced that he would be traveling to Washington next Tuesday to meet with President Trump. We've been seeing that Claudia Sheinbaum, the president of Mexico, as recently as yesterday, was talking about their continuing series of conversations between high-level officials of the Mexican government with the United States. And I'm just thinking, Jared, you know, the USMCA, and Sabrina was referring to this, you know, it took more than a year of intense negotiations. Now that's been essentially made moot by these tariffs. What kind of impact does that have on the most important, in many ways, trading partner that the United States has, which is Mexico, and, of course, Canada as well?
Yeah, very much agree with the importance there. The car production system that we think of as a U.S. car production system, it's really a North American car production system, and it's one that's been working well for a long time. So I've been very disheartened to see these tariffs slapped on Mexico and Canada, even though there are exemptions for the USMCA deal. Look, anytime Trump is talking to foreign leaders about dialing back his very destructive trade policy, I consider that to be a good conversation worth having. I happen to believe that this administration, maybe not all of them, but the people who I think have their heads screwed on most straight, are looking for off-ramps where they can find them. I'm talking about Bessent, I'm talking about probably Lutnick, and frankly, Trump himself on alternate Wednesdays, depending on what the market is doing. So if these meetings are an off-ramp opportunity, a dialing back opportunity, that's going to be good for car producers, for North American trade, and ultimately for the economy.